All right, good evening, all. This is Ajit Mishra from Religare Research, and we are back with yet another session of Week Ahead with Religare Technicals. So, as most of you know, that we talk about markets performance this week and what we are anticipating for the next week, especially for the key indices, both Nifty and the banking index, and combined with some of these stocks that you should keep a track on, both on the bullish and the bearish side. And finally, quick poll followed by the Q&A session. So let's get started. And before that, a quick disclaimer that these, discussion means these observations which we are going to share during the webinars is our, market observation. Is not a trading recommendation. So please take help from your financial advisor before making any trading or investment based on these, inputs. Now talking about markets, so it was another volatile week, which was more on the expected lines. Last week we talked about the same cause Nifty couldn't surpass, the 18,100 mark decisively. So we were anticipating that market is going to consolidate this week. And so largely, yes, for most part of the week, it was, both sides we saw swings, means the index oscillated in a broader range. But in the final sessions, the kind of pressure that we have seen, especially today, means on Friday, the decline was severe, especially, in the banking space, alongside with the energy stocks, which led to the decline. So finally, on the weekly basis also, both Nifty and Sensex lost over 1% each. And talking about sectoral performance, so defensive, largely, outshined the others. So it was FMCG and pharma, which managed to end in green. On the other hand, FMCG and pharma, which ended in the green. And on the losing side, we have energy, reality, banking, financials, and metal. So one thing which you have noticed is that banking and financials, which has been contributing and leading the market for quite some time, was among the top losers this week. So that clearly indicates a kind of profit booking, or you can say trimming the position in the market, especially when the global scenario is also looking slightly wobbly. So on the sectoral front, after the sectoral front, the stock specific, if you talk about, again, you will see that most of the defensive names like Sun Pharma, HUL, ITC, and Britannia, they were among the top gainers. And one exception was the auto pack, is the Eicher Motor. And on the losing side, we have Power Grid. The stock have declined very sharply this week, nearly 14% kind of a cut, followed by cement stocks, Shree Cement, Ultratech, and then NTPC and Hindalco. So you can say that it's more of a mixed, week, both on the sectoral and stock specific front. So what to anticipate next means what to expect for the next week. So this is the Nifty graph, daily graph. And last week, if you remember, we were talking about that Nifty should respect this trend line, this line, which was close to around 17,400, 500 area. And but after the initial uptick, this candle means this Friday's candle, it is completely breached that mark decisively, and it almost ended around the day's low also on the daily basis. So what it indicates now, so remember, if in the last time we also had this discussion that 17,400 to 150 is going to be the support area. So now the next support comes closer to around 17,100, which also coincides with this previous swing low and this 100 days of exponential moving average. So this, and then the long-term average of 200 days of exponential moving average, close to around 16,900, is what we are eyeing on the lower side. So the pattern or maybe the buoyancy has deteriorated. I won't call it as a double top pattern. With those who understand technicals might relate to this, but indications are in the favor that uh, upside seems capped. That is for sure. In case if the market's going to cap the damage, that is fine, but upside seems capped and close to around 17,550. This to 750 zone, closer around this area, that would act as a strong resistance for the week. So if I have to consider any position, I would rather wait for any rebound towards the level of around 17,400 to 450 area and look for shorting position for this level to come closer to around 17,100. So this is what the chart structures are currently indicating. Global indications are also like pointing towards the same. So this is what Nifty is currently indicating. But at the same time, yes, one additional aspect that one should remember is that not all the sectors are wheeling under pressure. So defensive like pharma and FMCG, they are looking fine. So it's not that all the sectors you should look shorting opportunity in. So barring these two, in fact, I would say that banking, though we are seeing profit taking, but fresh shorts not at the current level, that we are going to discuss in the next slide. And why we are saying this, we'll also discuss this. So you know what, that last 2 weeks we have been hovering around the record highs, this zone, and of late we have seen this pressure mounting on the banking pack as well, and this 39,800, which was the crucial support area, it breached that decisively. So again, I would say that the profit taking is quite obvious that after breaching the critical supports and forming this decisive candle on the last trading day. So possibility of testing a level close to around this 38,750 to 38,100. Though 38,100 is too unlikely for the next week, but still the next major supports comes to around these levels. So 38,800, 750 could be a probable area where this bank nifty might extend during this decline. But rather looking for short positions, I would rather suggest look for buying or accumulating private banks, because the overall trend is not going to deteriorate with this decline. It's just a correction which may last a little longer, because after retesting the record highs we are seeing this correction. So time wise it might go sideways, but that would should be considered as a buying opportunity instead of looking for shorts. So shorts for the traders, yeah, definitely one can look at, but as an investor, it's a opportunity. Those who have missed the bus last time, especially in the stocks like ICICI, Access, SBI. So these are some of the names which looked promising from the long-term perspective also. So utilize this decline to accumulate those stocks. On the higher side, in line with the Nifty index, they are going to see pressure coming in. So any rebound towards 40,100 to 650 zone means this area closer to around 20 EMA and around this 650. So which was earlier acting as a support should act as a resistance now. This is as simple as that. But in banking, we won't recommend looking for short positions. Accumulate private banks is something that we recommend. Now, since the market trend is clear to us that bearish bias is something which is more obvious, and we are going to look for shorting position, especially in the Nifty index. On the stock specific front, as we were discussing that healthcare, pharma, FMCG, they are still holding strong. So one such stock from the FMCG basket, which not only inched higher but ended with decent gains, is Britannia. So it gained nearly around 4% this week, and you can see the chart pattern means after retesting the major supports around 3,100 mark, a strong recovery towards the record highs, and then a marginal profit taking, a consolidation, and again an uptick. So indications are like in the favor that it's going to retest a level close to around 39.54,000 in the near future, and maybe surpass this level also. So Britannia is one candidate which one can look at for the long trades. Similarly, if we talk about the pharma space, majority of the stocks, though they are like under downtrend or witnessing consolidation. And in fact, we have recommended a couple of names during this webinar itself. Stocks like Oro Pharma, Divis, Dr. Reddy on the short sides. But Sun Pharma, Cipla, these are some of the names which are exceptions. Sun Pharma, in fact, is set for a breakout. So you can see the, despite whatever we are seeing in the market, this stock has been not only holding strong, but it has formed a very strong candle in the weekly chart, nearly around 6% kind of a gains. So this pattern means this consolidation that you are seeing right now. So this is likely to end with a positive breakout is what we are anticipating for the next week. So Sun Pharma can be considered for long trades in the next week. Now, since the bias is negative, almost all the sectors barring few. So shorting opportunity is something that also one should keep an eye on. So from the energy basket, BPCL. So you can see that it's a clear downtrend the stock has been trading in. Multiple attempts to overcome this trendline resistance, but after retesting the previous swing high, it drifted lower and reached the previous swing low as well. And indications are pointing towards that it might retest the level closer to around 305, 300, maybe lower in days to come. So BBCL looks a good candidate to go short in, and 320, 325 is the area basically where it's going to face resistance in case if there will be any rebound. And lastly on the list, we have the heavyweight, Reliance. And as a disclosure, we have recommended shorts to our clients also today through put option. So why we are saying, sell in Reliance, and again, it's very obvious that this trend line, the previous swing lows, if you join the last two previous swing major lows, so this has breached decisively. The stock, ended almost on the day's low. Besides, this long-term average closer to around 2,500, this red line, it also breached the same. So multiple indications that this stock is going to drift lower is there, and what support or area where it might take a risk. So maybe closer to around this red line, which is around 2350, 2360 zone. It was the area basically last time when rebounded multiple times after it formed a base around also this area. So this could be the next major support for Reliance, and this pattern is going to negate only if the stock is going to cross and close above 2,500 mark decisively. So Reliance on the short side. So just to sum it up, Nifty indications are clear that we are approaching towards 17,100 levels, and in case if there'll be any rebound, we are going to face multiple resistance around this 750 to 750. Both these areas going to act as a major resistance, and below 17,100 there's a possibility that it might drift towards 16,900 levels also. Similarly, banking index also looks weak, but instead of looking for short positions, it's prudent to utilize this phase to accumulate private banking names. On the long side, means stocks which are looking strong to us, Britannia, Sun Pharma, and weaker candidates, BPCL and Reliance. So yeah, this is all from the presentation part. Now we'll do a quick poll and then we'll start with the Q&A session. So please quickly fill this poll so that we can start with the Q&A session. And please restrict your questions to the sectors and the stocks that we have discussed in anything around it. No individual stock specific queries, please. See, you have to ask your question in the Q&A box. See, raising hand is not an option. Please write your question in the Q&A box, which is there on the front of your screen. All right, let's get started now. We have See, again, no stock specific queries, please. Mostly queries are stock specific in nature. So it's not going to help the larger public. So please try to understand that the idea of doing this, interaction is to benefit the major audience. So if we talk about individual stock specific queries, which you are currently holding as a personal position, that is not going to help the larger audience. Yeah, the first question is from Mr. Puneet Chadda on defense sector. So defense as a sector, we have definitely seen strong outperformance. To talk about BEL, HAL, BDL, and these stocks are still holding strong in the market like this. So, but in case if you're seeing as a trader, so I would definitely recommend to be slightly cautious, because usually what happens is that when the markets goes into the correction phase or a profit taking phase, initially the weak candidates get sold off, and then just to save those positions which are loss making, client and means participants also liquidate their stocks and holdings which are making money for them. So second leg may we usually see that even the good counters witness profit taking. So keeping that in mind, against, I'm not saying that you should not hold your existing position. It's fine that in case if you're holding long, but for fresh long, one should wait for some stability into the market, and then definitely you can look at the stock like that we just named, like HAL, BEL, and PDL. IT, yes, this is something that Mr. Vikram Rakode have asked. This is something important, and that one should know that IT as a sector, it's almost behaving in line with what we are seeing in the US markets. It's almost identical. So like the US markets have also come down to their previous swing lows, and the IT index has also come closer to that level. In fact, the IT majors, Infosys, TCS, Wipro, all these stocks have come closer to the previous swing low from where this rebound started in those names. So, but since we are not seeing any respite on the global front, and indications are still mixed, possibility of further decline. So as per the positioning on the weekly chart, possibility of 10%, 8 to 10% kind of a decline is still there in the IT majors, in the IT index. So please be cautious, especially if you are a trader and looking for a long trade, a rebound, because every now and then we see some bit of respite or a rebound for a day or two in between during this corrective phase. Please avoid taking those trades on the long side. The trend is not going to reverse overnight. We need to have some base formation in the IT index, in the IT counters, and then it could be a decisive reversal that we may call. But as an investor, definitely it's an opportunity, because as we were discussing that it's just 8-10% is what we are eyeing further decline. So if your view is 2 to 3 years, then you can look for accumulating IT counters with the long-term view. So Mr. Vijay Raghavan, I hope that through this I've answered your query that whether you can invest in Wipro or not. So Mr. Venkateshan have asked for like energy sector, especially the solar energy part. So this, Mr. Venkateshan, is not a day or two story. It's a very long term that, government is taking initiatives for clean energy, and, several companies are planning capex around the same. So it's not going to, show results in a day or two or in a month to come. It's years long, and maybe 5 years, 10 years, it means a decade kind of an investment in case if you are looking for such kind of themes. Short term, please avoid making investment based on the news that some company is making investment for some reason or the other. So these investments are long term in nature. They're not going to yield the result in very short term. There could be some intermediate uh, uh, recovery or knee jerk reaction, but that overall the idea behind making such investment is purely long term. So in case if you want to stay invested, because these sectors are uh, you know very capital intensive, so it takes time for the companies to make money when they start those projects. And we had certain examples in the past which failed badly in the renewable spaces. So it's something that you should be very clear that the time horizon and at the same time the company's efficiency to uh, work on those models. So all these factors are important, especially when we are making investment in these niche sectors. So Daulat, we have already discussed about IT sector. Yeah, FMCG, Vikram have asked. So FMCG, as Vikram, we were discussing that uh, FMCG and pharma, like selectively, I would say, are the two basically which look strong to us. And but again, it's something that we one needs to be stock specific within the sector also. So we talked about Britannia. Dabur also looks strong within the sector. HUL. So these three names, I would say, comes in my mind, especially if we talk about FMCG from the next week point of view. So again, Nifty and Bank Nifty we have discussed in detail. Those who have joined in late, in single sentence, our view is negative for both Nifty and the banking index. And 17,100 is what we are eyeing in Nifty. And the next support comes around 16,900. In case if there'll be any rebound, there's a possibility of selling pressure to continue. And banking, though the view is negative, we may see pressure, but the idea is to accumulate private banks, not to look for short position in the private banking space. So Lavanya, Mr. Vipul, I hope that answers your query. Devashish. Okay, yeah. Next question is from Mr. Ramakrishnan on middle stocks. So middle stocks, largely we are seeing mixed trend. And we are not seeing participation either side, like they are not seeing any decisive up move, or nor we are seeing any sharp decline in the metal counter so far. But positioning wise, from the short term perspective, the inclination towards negative side is high. So I would rather look for shorting position in the metal counters, barring a couple of names like JSW Steel still strong. And JSW Steel is and Vedanta also I would rather give a miss. But rest of the stocks are sideways to negative. So Tata Steel, Hindalco, SAIL, all these counters falls into that category. So look for shorting trade instead of going long in metal stocks, at least in the near future. Yeah, next question on the sector, auto sector. So almost we are discussing all the sectors one by one. So auto, yeah, auto as a sector is still holding strong. In fact, till last week we had a couple of very strong names like Eicher, Maruti, which are still, they are comparatively, still better if you talk about the overall, auto space. But again, then we have names like Tata Motors, which are really in a pressure. So it's a kind of a mixed, trend that we are seeing within the auto space. In fact, Hero Motoco also witnessed a decline. Bajaj Auto is also slightly on the back foot. So we have more of like a stock specific approach that is something that we recommend. So top performers utilize dip, market dip to accumulate them. So stock like Eicher, M&M, Maruti, all these TVS, all these stocks are among the top performer, because either they are trading at the record highs or making or inching towards the record highs. So these are some of the names which we like, but again, the idea is to accumulate them, not to go for trading, short-term trading. So in case if you're buying in cash, accumulating in cash is fine, and avoid Tata Motors, for short term at least. So this question, though, is not related to any sector, but this is something which is important to answer. Mr. Vijay Raghavan have asked this, that whether I should sell my mutual fund, equity mutual fund, or should I continue in long term. So Mr. Raghavan, the idea is, in case if you need money in short term, you may liquidate. But if your approach is investment approach is for a year or two, you should definitely stick in. So correction, profit taking, volatility, these are the opportunities in case if you're a long term investor. So you should not feel worried about the short term fluctuations and market correcting 5-10%. The idea is to accumulate them, in case if you are a long-term investor. So just to give you a perspective, in case the market corrects 5-10% at one go, so the idea is to put more money through lump sum and continue with your SIP. So those who are continuing with the SIP part, so this correction phase should be utilized as a buying opportunity, not to look for exiting. Okay, what's next? So FMCG we have already answered, metal we have already answered, banking sector we have already answered. Okay, it's almost repetition. All right, so we have answered all the queries, guys, and sorry, I can't answer the individual stock specific queries. The list is long, and it's not going to help the others. So for individual stock specific query, you can please check with your advisors. So yeah, thank you everyone. And next week, same time, we're going to connect. No, sorry, next week we have this special monthly rollover webinar. So for that, we're going to discuss the derivative rollover, the monthly rollover. So my colleagues are going to take this session. So be around, and till then, goodbye. Take care. Bye.